G'day and welcome to the Investor Motivation Podcast. My name's Rob Gowdy and today I've got...
Rachael Todman.
G'day,
How
Rach.
you going, Rob?
I'm well. Good weekend?
Yeah, it was good. Yeah,
Cool.
Weather's nice, so can't complain. What about yourself?
Very good. Went to Melbourne. Some of the kids did the half marathon and that was a
Good
bit
on.
of fun. So they all got through in their different times. But
Awesome effort.
yeah, 21Ks the half and there was just people everywhere. It was very cool down at the, I think the Melbourne Nike Marathon or whatever it is.
Yeah,
But
okay. Awesome.
people everywhere. It was insane.
Nice.
We're doing a bit of a deep dive into a business.
Yes, we are.
Who are we chatting about?
So this week I picked Lovisa Holdings. So it's kind of an interesting one. It's sort of a little bit of a pocket rocket, I feel.
Yep.
Yeah, so it's a fashion designer jewellery, so they're focused on low cost. Their target market's sort of, your young teens, I guess, to early
Right.
to late 20s. So
And fast fashion jewellery where it's about lower cost,
Yeah.
that if you buy the special dress, you can just go and buy something that really suits that for that occasion.
yeah, absolutely. Yeah.
Fantastic. So what we'll do is, I think this is our second go at doing a bit of an overview of a business. Last week we thought, right, we'll pick one that we know well, which was Microsoft, but that turned into a beast. This is a simpler business, definitely doesn't have a wide economic moat, but we'll cover that off in a second. But what we'll do is just go through, there's 8 areas that we're going to consider when we're having a chat about the businesses we're going to review. So there's 8 areas. Obviously, what does it do? Where does the income come from? What is the economic moat, as in how hard is it to replicate this? What are the borders to entry? The past performance and future performance, the balance sheet, which was important, dividends and payout ratios. And then we're going to have a look at the analysts, the buys and sells, and sort of see what they think, and also who owns the business. Do the people running it own it as well? And then if there's any price-sensitive news that's about.
Yeah, absolutely.
Cool. So kick us off with the business overview, Rach, which you've broadly done a little bit there, but
Yeah. Yeah, so as we said, so low cost jewellery, high fashion, so it's not a forever item that people have, so good turnover there.
Right.
Lovisa have got around 900 stores now, so they were founded in 2010
Yep.
in Hawthorn, Victoria. And as I said, their target market is young demographic, and they're expanded over about 45 countries globally.
Wow.
So with their highest consumer at the moment is Europe, then followed by Australia, the US, and they're trying to break into sort of the Asian countries as well. So.
Fantastic.
Yeah.
So now, one thing you mentioned last week when we floated this one, Rach, that you've got a little bit of a history with the founder of the business.
Yeah, so Brett Blundy, so
Yep.
many years ago, when I was managing one of the Sanity stores in town, we did a mystery shopper report. They were a frequent thing that happened, and we got 100%. So Brett took it upon himself to fly to Melbourne and come to Horsham. I don't think he realised how far Horsham was.
Yep.
But he made a special trip in recognition of what was an awesome result. Great guy. So it's really nice to see that someone that's got so much skin in the game that is really nice bloke. So.
Still down to earth and still just knows how to run retail businesses.
Yeah, and his staff too. Rewarding them for
You think he may have thought Horsham was a suburb of Melbourne?
Potentially.
That has happened before. And I think in the last 12 months they've added nearly I think it was about 91 stores to the. That is a huge rollout, and it takes them, once they've identified the right shop, and they can run their stores in very, very low footprints. So they don't need a huge amount of space, but they can fit out a store in 2 to 4 weeks.
Yeah, it's incredible.
Yeah,
you see them popping up everywhere. I notice now. So
so fantastic. Now, one other stat that I think is important, obviously they can fit out a store within 2 to 3 weeks, but they can go, and this is when I remember reading the PDS when it floated back in 2010, sitting on a bus somewhere, but they can go from concept design to in the store with a bit of jewellery within seven weeks.
Yeah, it's incredible. And yeah, it's around 100 new designs, they're saying, believe it or not, that come into stores each week. So
Right.
it's incredible to think that, that they can get that turnaround, and yeah, it's amazing.
So a big part about their business is, not only being obviously efficient in terms of the size of the store, their systems, looking after staff, which clearly these people have been doing for many years, but also rolling out new stores on a consistent basis.
Yeah, and they're also increasing, of course, their online presence now. So they're starting to ramp that up a bit for more exposure.
That's interesting. So they're across 45 different countries, and they've got an online store presence in each one of those as well.
Yeah, well, they're ramping it up a bit. So it's not something that they've focused highly on in the past.
Yep.
Even advertising, you don't really see them advertise a lot on social media, and that they've been store focused. But I think they're branching out.
Yeah, but you just see them every shopping centre you go into, they're just there.
Yeah, my daughter Ella drags me into them every time.
And I've got 2 daughters, and I remember going into them regularly. So obviously the store rollout has been impressive, and obviously that's translated into higher earnings. One thing that is worth commenting on, that looking at their gross margin, that's been steadily going up. From 2000 was 77%, now it's 81%. So these are some pretty good metrics in addition to growth.
Yeah.
Now, going on to probably topic number 2, which is the economic moat. They're not the only players in this game.
No, that's right. So classified as, with no surprise, as a low moat.
Yes.
Given that, it doesn't cost too much to set up a jewellery store or come in if they're doing low format or small format as well. So it potentially could be a saturated area in some aspects, but Yeah,
but their presence has been
amazing.
really strong, and to replicate what they're doing across all these different countries. And when you go for the list of countries, I've read Ecuador's on the list, and into Africa. But they are up against brands like Pandora. But is that a different type of cost, Rach?
I wouldn't see that as direct competition, because Pandora's definitely a different price point. Whilst it's not excessive by any means, it's not your throwaway jewellery or like it's something that you'd wear ongoing. But so I don't see them as a huge threat, but who knows what's ahead.
Yeah, absolutely. Now, past performance over the last 12 months, the stock is up over 88%, which is a tremendous result. Obviously, the markets as a whole in the last 12 months, everything's been very positive.
That's right.
Rach, do you have the number from a share growth point of view, excluding dividends, the total growth since listing?
Yeah, so 1,355%.
Cool. So 13.5 times. Yep.
Incredible, yeah.
Yeah, amazing wealth is generated.
Excuse me.
That's all right. If you were in early, these make such a big difference to people's portfolios. So looking at past performance over the last 12 months, earnings have grown by 17%, so that's fantastic. In-store sales declined a bit, but they've also got that little bit extra margin, and earnings are forecast to grow by around 16% for the coming 3 years. Yeah. So things look pretty decent. What about the financial health, Rach? What does that look like?
Yeah, so they've got strong financial health, which is something we obviously focus on or look for. So they've got 120 mil in cash at the moment. Now, they do have a bit of debt, but it's the latest figures that have come out that they've decreased it overall, so which is what we want to see then. Yeah,
and it's what they're using debt for sometimes, which is really important. It's they're using debt to continue this store rollout, and so the debt to equity ratio is about 67%, which is a fair bit higher than our sort of the 40%, which is considered to be pretty. 40% and below is fine.
Yeah.
But the interest cover, which is the profit they make, how many times that profit will pay the interest on the debt they've got, is at 7.4%, which is well above the 4 that we're comfortable with. So pretty comfortable.
Yeah, absolutely.
Yeah. Now, dividends and payout ratios, that's a bit of an interesting one here. They've had,
Yeah.
there's some amazing numbers, but there was one number that you pricked your ears up about and said, oh, hold on.
Yeah,
Yeah.
so payout ratio being 115%. Not something that I generally, like to see.
We like to see, if you
Them
make...
retain more of the profits back into the
Correct,
business.
yeah, and actually paying out more than they make, is not ideal, but obviously they've got the cash flow to do that. So has dividends got ahead of themselves a bit? But one interesting stat, obviously dividends 10 years ago were 13.3 cents per share. Now they are 87 cents per share. That is up 6.5 times. Good numbers.
Yeah, absolutely.
So did they need to increase it up by that amount? Possibly not.
Being quite generous.
Very generous. So where to next? Rach, the analyst?
Yeah, in the recommendations. So there's a few mixed reviews really from the analysts out there. Some will see potential for growth, which is looking strong. Others are quite cautious that it's a high valuation at the moment.
So we've got 6 analysts. This is not a this is a $3.9 billion company, so it's not a monster. You don't get lots and lots of analysts giving their opinion, but of 6, 2 are saying it's a strong buy.
Yeah.
Even after the price has gone up as much as it has. 1 is saying it's a buy, and 3 are a hold. And we should use some colour in these ones, right? So we can see the different...
easier for us.
Obviously, dark green is a strong buy, green and so on, and red down to sell.
Yeah, so there's no sells on there, so
Yeah, that's great.
Ultimately.
In terms of price targets, this is where I think when we looked at Microsoft last week, it was all well under, and it's sort of seen as opportunity, but with... across the analysts, I think there was around $30 per share. It's currently trading at mid-30s. So seen as overpriced, which is not surprising after nearly going up by 90%. Now, your friend Brett Blunt,
my new friend.
Your friend. So let's talk about ownership.
Yeah, so he's so Brett that I spoke about earlier, Blundy, so he's the founder of it, and he's now owns around 38% of the business.
Yeah,
so
I think might be his wife. I saw on the list there that she might own
Tracy?
a percent or two. Internal ownership's really high.
Says a lot. Yeah, absolutely. Current CEO Victor, so he owns quite a substantial part of it in terms of it. So that's always good. And then institutional investors is around 12%.
Cool. So the people running the business own around 43% of the business. As always, Vanguard and BlackRock are there. They're the index managers. I don't get overly excited about them owning any of these businesses because they are index managers. If it's in the index, they buy it.
Yeah.
But I see Hyperion and Pinnacle, more active management, they own around 5% of the business each. So there are some quality people that are assessing these businesses and have purchased it with a real meaningful amount.
Yeah.
Excellent. Any latest news or announcements that you found of interest?
Yeah, so speaking of the CEO, so Victor, so they're transitioning him out to a new CEO. So he's being replaced by Smiggle's John Cheston. So so that'll be a change for the business. John's been in retail for obviously a long time, so bringing in some different ideas, I'm sure. So,
similar type of business in a way that Smiggle is stationery and fun stuff for
the younger
for the younger people, and I'd say that Lovisa is a similar animal. Fantastic. All right, I think that's a really good roundup. Thanks, Rach. That was amazing. Thanks everyone for listening. You can hit Rach up on what are your socials?
So Rach Todman, so Instagram, Facebook, LinkedIn, the usual ones, TikTok. So
just at Rach Todman.
Yep, believe so.
Excellent. You're still that. And you can find me on TikTok and Instagram, but obviously our website, Consorting Private Wealth. And please check out our YouTube channel, which I'm very proud of because I've been doing that for such a long time. That's Investor Motivation, and obviously some of you might be watching this podcast there.
Let us know if there's a business that you want us to check out as well. So any ideas is cool.
Please challenge us, and we're happy to do the research and learn more ourselves. Thanks for listening. We'll catch you next time. Cheers.
See ya.
Bye.